We've said in our last strategy day about 15 months ago that we were going to increase risk-weighted assets by about £30 billion to the UK through 24 to 26. Today, slightly less than the midpoint of that journey. We're at 14 billion out of the 30 billion. So we're making good progress. We are deeply committed to the UK in every way, shape or form. This is our home. London is a great financial centre, and people will value London as a financial centre more and more day by day.
Venkat, it's Karen jumping in. Good morning to you. I want to come back to some of the big cross currents we're seeing on the macro side. What are you anticipating in terms of the fallout here from all of the uncertainty around tariffs, whether that is people holding back on some of the loans, whether it's ramped up activity that you're seeing in equities and FX? What are the fallouts that you're expecting from here?
Fairly high market volatility. It's calmer now, but I imagine it will continue to go up and down. And then when you go beyond that, as you've seen in our results, that market volatility helps us to help clients manage their risk. We can do so in a profitable way that helps them as well, and it helps markets income as long as you manage your risk well. I think going forward, the longer this goes on, the greater economic uncertainty there is, which is putting companies, as you say, off from making decisions. Individuals also take time to make decisions, and you could have a risk of a slowdown in economic activity. Now, we have a good bank, well diversified geographically, by product, by region. You can see the mix showing itself and the strength of that diversification in our first quarter results. But even though we have a good starting point and you don't really see it in economic numbers, we've got to be prepared, and Barclays is prepared.
When you're talking about preparation, are you talking about preparing for a recession in the United States?
Well, we are prepared for a range of eventualities, and we built our plan around that range of eventualities. Some of which is economic weakness in our major markets, the UK and the US, and some of which is market volatility and slowdown in various forms of activity. But as you've seen, even in our first quarter results, volatility was up in the first quarter, not as much as it was in the second quarter, has been so far in the second quarter. Our markets business did reasonably well in the first quarter, and our deposit growth in the UK has continued, and therefore we've upgraded our NII. So we have cross trends in the business that help protect us.
Venkat, sometimes in banking there are moments in time that has a big ramification for the direction that a lot of banks take, and I do wonder whether there is some impact here from what we're seeing, that huge investment banking change for a lot of banks, the volatility that's really driving the performance. Do you think now we're going to see a reset of expectations of investment banking versus wealth management, for instance, where a lot of the banks were focusing on the last number of years?
Well, look, I think it's important to have a diversified set of businesses, because each one will have its moment in the sun, and each one will go through a period of relative slowness. And that's what we have. And I do think that investment banking, or particularly the trading part of investment banks, has been having its moment in the sun in the last few months. But, you know, calm will eventually come to the market. People will have greater clarity on what the new economic order is going to be, and then I would expect deal activity to pick up.
Venkat, good morning. Juliana here. Let me take you back to the UK. We've been witnessing a drop in consumer sentiment here in the UK. Spending, though, seems to be holding up. What is your take on the state of the UK consumer, and more importantly, the outlook based on what your customers are doing?
I think the UK consumer has been cautious over many years. Actually, you started in COVID. And what we've seen through our exposure and our dealing with our clients, and, you know, we offer all the services across the UK to individuals, small businesses, large businesses. What you see is careful stewardship of their finances. They're watchful of their borrowing. Obviously, housing is a big part of consumer spending, and a shift in the way in which they do their spending, you know, slightly less non-discretionary, slightly more careful on discretionary. So I think they're preparing themselves. Having said that, unemployment is still relatively low in the UK, so there are jobs, as we've seen. Growth could be a little better, and we all are supporting the government in its ways to make growth better. But so far, so good in the UK.